Okay, so just running through the news since Monday, Tesla has ran up to 17.50 a share. You all know how much of a fan I am with Tesla. I am finally hopping on Twitter and tweeting. It seems to be a pretty good platform, better than I thought it was going to be. And just like I just try to get my thoughts out there because it's a little bit more casual than making like a video post or like a picture post. But I love the company, but sometimes things are just too expensive to establish positions. We talked a little bit about that last time. You know, at 17.50, it was bigger than Bank of America and American Express combined. So sometimes you just have to like step back and be like, what? Right? It's kind of like how we stepped back and said Nikola at $90 a share was bigger than Twitter, bigger than all these like really big companies, and bigger than all their partners. It's kind of some things are just kind of don't make sense, and if they don't make sense, and if something smells fishy, then there's probably like when there's smoke, there's usually fire, right? Stuff like that. And I'm not saying Tesla's fire. Like fundamentally, it's a strong company. I think it's just run up a little bit too far. And just to summarize my view on that, Tesla, the last time Tesla was trading at over 8 times sales was 2015. And so 2015, oh, so there is echo when both of our mics are on.
Why? Because you still have that the 100 off. I'm gonna move mine to the 100 too.
Okay.
Makes it better.
Cool. So the last time that Tesla was trading for over 8 times forward sales was 2015. And if you guys want to pull up the chart, Tesla actually underperformed the market over that time frame for 5 years, right? So for 5 years, it was trading at like $200 a share, $250 a share, and just trading in that range because the valuation had run up further than like I guess the fundamentals, right? Thank you so much. Good for Tune. And so basically, I'm not saying you're gonna lose money, right? What I'm asking for is either mediocre or bad companies at extremely cheap prices. That is deep value. That is vulture investing. That is Carl Icahn, Bill Ackman. That's the stuff that you like. Margin of safety, Seth Klarman at Baupost. Like that's that style is deep value. Or and these days I kind of because I don't want to actively have to monitor whether or not they're going to go like mediocre companies. What they're going to do. I really want great companies at fair prices. I am willing to overpay for Tesla. I'm just not willing to overpay this much. So that's that. And so another piece of SoftBank continues to struggle. Man, it amazes me. For those of you that don't know about SoftBank, Masayoshi-san kind of started this really gigantic, like I think it was the Vision Fund or Visionary Fund, and he was able to raise billions and billions of dollars by like companies like WeWork, by companies like ARM. So ARM makes chips. They're amongst Intel and Nvidia, those types of things. I believe they're more like the Snapdragon, like their biggest thing is more mobile focused chips, but I know there are people on the stream that know much more about that than me. And they're trying to sell that company because they're struggling and they need cash. So it amazes me that have you guys seen his pitch decks, Masayoshi-san? They're like from PowerPoint 1995. From like it was just so bad. And sometimes it amazes me because I've always like for the past maybe 5 years I've had friends really tell me, or like people that I know who are relatively well off, like, hey, can you manage my money? Can you manage my money? And the business of managing money is like no, it's really stressful and hard and whatever, and I don't want to have to deal with that unless right, like, and if you're only charging like 1% or 2% of fees plus some whatever, you have to raise like tens and hundreds of millions of dollars to even compete with kind of whatever, right? So it amazes me that Masayoshi-san, with his Vision Fund, with not great analytical skills and obviously not a great kind of investing style and obviously not great pitch decks, was able to raise so much money. But I believe he actually comes from the SoftBank family-ish. I have to look into that. Masayoshi-san. So maybe, right, like if you're born rich, maybe it's just easier to, yeah. So let's see. I don't know. Yeah. So anyway, whatever. He's a billionaire. So whatever. Maybe it's easier for him. Okay, so coronavirus spending pushes the U.S. budget deficit to $3 trillion for 12 months through June. I even did. I tweeted this earlier. It was a reply to someone when I was talking about like potentially like I know people are talking about like there's a big fight. I don't know why people get so political, but there's a big fight right now in the States about like, oh, I'm not going to wear a mask, or oh, you need to wear a mask, like all that stuff. Like, you know, I'm a economically leaning person, and if you kind of look back at what the U.S. government did with cigarettes, like I don't know, like the libertarian in me says that's a little bit too much, but you can influence good behavior using kind of like taxes or fines and stuff like that, and still leave liberty, you know, there in peace. So one of the interesting things is in the context of a conversation that I was tweeting out in my Twitter sphere was, you know, what if we had like spent some money, if we're going to print a shit ton of money, why don't we just print, if we're going to print all this money, why don't we just spend like, I don't know, $50 million sorry, like, I don't know, a couple $1 billion employing like 100,000 distancing deputies so we can kind of open up, but also like influence mask wearing and distancing behavior. And those people, like, it'll be a temporary thing. And then in that rabbit hole, I actually looked up how many, like if you go on to see the full thing, I did a full tweet. So go, I'm not going to explain it here. But I basically said, what did I say? Where did I see my replies? Tweets and replies. Guys, I'm new to Twitter, by the way. How do I?
Just the way you talk about Twitter is pretty obvious that you're new to it. Also, I feel like we shouldn't be echoing anymore. I'm just throwing that out there.
Okay, whatever. We basically printed like $2 trillion, and we have, if I remember correctly, we have provided like over 400 billion of income support, and that is between income support meaning direct stimulus checks and the extra like $600 a month for unemployment benefits, right? So I would just say like, oh, it's your mic that echoes. I have a very nice Audio Technica, and we ordered like these streaming materials are very rare, and now you can't find them. So yeah, so I guess when you talk, I will mute and vice versa.
What's weird though is when we tested it, doesn't it?
Okay, well we can echo when you talk, so you guys will just hear an echo when Nia talks. Okay, cool. So that's that. Let's see, more news that came out. Moderna's COVID-19 vaccine moves to the next phase of the study. You know, that's cool. I think I don't need to look into the stock to know it's overvalued. Yeah, so, oh, by the way, James is saying you need headphones. We actually have no feedback audio. So, like, I don't hear her and me. So, it's kind of one of those things. So, one of these days, we fix the video stream. We'll get to the audio next time, okay? Cool. So let's see. Google invested $4.5 billion in India's Jio platforms. I've always wondered why we haven't, like, more of the big tech giants haven't pushed further and more aggressively into India. India is such a big country and it's so under penetrated. That's that. And like, that's just a wonder of mine. And, you know, more things, right? TikTok. Trump is actively going after TikTok, as much as I am afraid of that, because obviously I am able to talk to the most people, and I love the format of TikTok. I love TikTok so much. That's when that convinced me to make my first video, right? I also am kind of a patriotic American and believe that, like, they shouldn't be able to influence our data or own some of our data. So I did see in response, TikTok is purchasing a lot of Google Cloud services. So I think the play here, and I haven't read deeply into it, I will, is that TikTok wants to store all US user data in the US and say, you know, but I think, you know, there's a chance that they won't rest until TikTok sells to a US ownership. I don't know if that's ever going to happen. So, but if you guys are on TikTok, you know, I'm on YouTube now. So, YouTube is easier to do kind of longer form stock pitches and stuff like that too. So cool. Thank you all for joining me. Just running through some of the news items. You guys saw the Bitcoin Twitter hack, right? I am very, very convinced this has happened so many times since I've followed crypto, and it's never crypto. It's the fact that like Twitter gets hacked or Twitter's content delivery network gets hacked, et cetera, et cetera, et cetera. So, I mean, it's just funny. I think it's more funny than anything. But just to remind everyone, my position on Bitcoin is I'm super bullish right now. And the more I read, I'm super bullish, right? I looked at a logarithmic scale on Bitcoin today, I think, and plotted it. Hold on. And plotted it against. Hold on, I have to put on Do Not Disturb. And plotted it against, or someone had plotted it against the halvening events and all that stuff. And yeah, like, I mean, again, right? Past performance does not indicate future results, but it was pretty compelling chart that like on a log scale, Bitcoin runs shortly, like leading up to the halvening events, it kind of flattens out for a long time. And then after the halvening events, it kind of gets enough attention and kind of rallies again. And if it at all approximates internet gold, it is the right thing to do. So I'm going to finish this market update by telling you all my opinion on the market. And I say it every episode. But basically, we have been trading at 3,000 to 3,250 on the S&P 500 since early June, or no, maybe late May, right? Since late May. Before that, we were trading in a range, all the way back to April. We were trading in a range, the step below that. First of all, I think that the way that the market is calculated is, and that's why I focus on the S&P 500, is it's market capitalization weighted. So the bigger companies contribute much more to the index than the small companies. So we're in a world where small companies are getting absolutely royally ruined by COVID, and the companies that come out on top are, one, the tech software companies, and two, the companies that have enough liquidity or access to capital markets to survive through this period. So that being said, I think that people are trying to hide out in really good stocks, really good companies with growth, right? And some companies have just run up too much, but some companies haven't run up as much and are still attractive, but are still great companies. I am not convinced that I'm confident enough in some deep value COVID plays to really play in that sphere too much, especially since I have a day job and then my night job is talking to you all and making content. Like I really don't have a ton of time to be like in front of my screens doing deep analyses on like, I don't know, like airline stocks, right? Unless it's helpful to the community. And that's what really like gets me going, is like I do it because like there's a collective interest by everyone on this live and everyone, whatever. So I would say I believe this is a stock picker's market, and that means that there are great companies at reasonable prices now. Unfortunately, that's not Tesla, and that's probably not Amazon right now. So that's that. But there are other companies out there like Facebook. Facebook trades at, let me go to Facebook. Facebook trades at 6.5 times next year's sales and 13 times next year's EV to EBITDA. And you get a similar growth profile to Amazon. And, honestly, you get a similar profile to Tesla, unless you assume that Tesla breaks the autonomous driving game. So that's that. Hold on. People are saying lag. Okay, whatever. So I would say it's a stock picker's market. I will also caution everyone here. As I do some more light digging on macroeconomic stuff, I am increasingly convinced that the stock market might actually increase and keep increasing on nominal terms. So what I mean by that is, by US dollars, if we're printing all this money and all this money wants to hide out, it's going to hide out in US equities and gold potentially. And the market will run up in US dollars even as purchasing power and the power of your dollar kind of goes down elsewhere. So I would just be kind of cognizant of that. So I'm still kind of like, I like to keep dry powder, right? Lots of US dollars just to pounce, because it's almost like the ability to buy, right? But like, I wouldn't like, so I've been saying 50%, half type of thing, where half of your portfolio is stocks, and then, ignoring real estate for now. Actually, let's not ignore real estate. Like, half of your portfolio is stocks, and make sure to pick really good ones at fair prices. Those are the ones that are going to outperform. It looks like TikTok is actually lagging. Guys, for once, TikTok is the one lagging and YouTube's working. Good job, Nia. You did. That means Nia's doing a good job.
Besides the echo, but we jinx it. We can never get it 10 out of 10 either way, but I'll take it.
So where was I? I don't remember. I don't either. So, so the portfolio allocations. So portfolio allocations, like right now, just kind of like as of Thursday, again, my portfolio won't ever really be idealistic in my view too, right? Because I really don't love selling stock. So if you hold Tesla, sometimes I'm like, well, first of all, if you saw Tesla go to 1750, and I hold Tesla, if you saw Tesla go to 70, I've held Tesla long before a lot of you even like heard, like knew about the stock, right? Like, I bought my first Tesla. I bought the X 3.5 years ago, and I did studies on Tesla and Fisker Automotive in college, back when that was like, we were learning about venture capital. I'll go bring some venture capital pitches. So anyway, all that to say, finger in the wind, it's like half of your exposure in stocks, quarter in cash, maybe 30% in cash, and the remainder, or whatever, that remaining 50% that aren't in stocks, you should definitely still have a lot of cash ready to go. But the other part should be some sort of inflation hedge as well. So my personal inflation hedge of choice is actually Bitcoin. You all know that, because I think there's just higher upside there. But there's also the likelihood that there's the possibility that Bitcoin doesn't approximate gold's moves, right? So I just like Bitcoin. Having some exposure to gold is good, but again, like, gold is only so good. Exposure to gold is only so good as until there's a real breakdown and everything and the world falls apart. And then, like, if you own shares in a trust that's sitting in Germany, like, you don't actually own the gold. That's another reason why I kind of like crypto, right? You kind of own your own keys. So that's that. And then, so 50, 25 to 30% cash-ish. And then the remaining is some sort of like inflation hedge type of asset. And I'm going to say this, my portfolio doesn't look perfect. I am catching up from 25% allocated to stocks to 40 to 50%. And I'm buying very tactically, and and I own a lot. Like, we own a lot of my net worth is in real estate. You guys all know that me and my friends own 15 rental homes here in Nashville. And I like real estate because it's also an inflation hedge. There are only so many square feet in the world. The world is not making new square feet. Or, yes, lava, everything's turning over, but you get what I mean, right?